Hi, this is Joseph. In this video, I'm going to talk about one way to trade a reversal pattern. Now, this is more or less a short-term trade, meaning that it's like an intraday strategy. We're expecting to get into the trade and then expecting the trade to reach its profit target or expected profit target within the same day. Now, each day that you take a trade like this, first of all, I can't guarantee that you're going to get a trade just like this every single day, but there are a few things that you need to be aware of before you decide to trade something like this. It does set up on all of the currency pairs, on every single currency pair. I prefer to use this strategy on a 30-minute time frame, and it's just my personal preference. I developed this method and I'm really comfortable with using it on a 30-minute time frame. I do have a few students that have tried it on smaller time frames, and I prefer to use this strategy using the CCI indicator. So I'm going to break down exactly which indicators I use, what settings to use, and then I'm going to give you a few tips so that if you try to use it on your own, you can try to improve it and to avoid making mistakes with this particular strategy. This strategy is called the HL30. Again, please be careful if you try to use this strategy and follow along with some of the things that I'm saying. I'm not saying go run off and do it right away. You really want to know this strategy inside and out and really know when to use it, when not to use it. But I have some students that are looking at, and they'll create a page on their MetaTrader platform, and they'll just look at maybe 6 to 8 different currency pairs, all on the 30-minute time frame, and all they're doing is waiting for that 2 p.m. the 5 p.m. rollover, and then identifying the previous day's high and low, and then they trade an HL30. Now, let's go ahead and talk about the setup. Remember, I'm talking about the HL30, which means the previous day's high and low. So we've already have this rollover period. It's already just a few minutes after, 1 hour after the rollover period, New York time. So the rollover period is more or less like an industry standard. That's the way I like to look at it. It's 5 p.m. Eastern time or New York time. That's when that actually occurs. Now, depending on the MetaTrader broker that you're using and the time zone that MetaTrader, that broker's server is located, it could show different rollover periods. In other words, your timing could be off. And another thing that could also change it is when we experience that daylight savings time. So in case you don't know, I'll show you quickly how you can draw or have the charts automatically place this line right when that rollover period occurs. You can right click anywhere in the blank space of the chart, and you can go down here to Properties, and then go over here to Common, the Common tab. And right there you can see the word, the 2 or 3 words that read Show Period Separators. Check that box and then click OK, and it will automatically throw up these lines when that rollover period occurs. Let me show you a trade that we took yesterday, and I actually traded this with the trade copier, so this will give you an idea of what I'm doing with the trade copier as well. So I'm going to release that so I can scroll these charts back to yesterday's rollover period. And you'll notice that we had a high and a low, and the range is pretty small. I've got a resistance point in here at 1.1129, almost 30. So we'll just call it 1130. That's my resistance point. And then I have a low here for the previous day, right here, which was 1.1085, or almost 86. That's my support level based on the previous day's trading range, the high and the low of the previous day. And then I wait for that 5 p.m. rollover period. After I have identified the high and the low of the previous day, I then need to wait for price to approach the high or the low within 10 pips. So it has to go up to at least 1.1120 if the high was 30, but it cannot go beyond 1.1140. If it went beyond 1.1140, if it went beyond 10 pips of the previous day's high, then I would cancel this trade. I wouldn't trade it as an HL30. But if it goes up to within 10 pips below the previous day's high, so let me show you what I'm talking about. I'll put a price line right in here. So if the high was 1.1130, then price needs to come up to at least 1.1120 to qualify for that HL30. That's what I call or refer to as the 10 pip range. And then again, it can't go beyond 1.1140. If it goes beyond 40, price spikes up, and even if it comes back down, it would be a different type of trade altogether. It's not to say that you can't trade it and sell it, but it's not this particular strategy is what I'm getting at, because this has a very specific entry, target, and stop loss, as I'll show you in just a moment. So now I need to wait for price to come up within this 10 pip range. And then you'll notice that here it doesn't really do it here. I'm still waiting. This is, again, 30-minute candle, so you can see just about how many hours it actually takes. Sometimes I get the signal within the same rollover period within the first hour. Other times I have to wait 6 or 7 hours, and then other times I've actually waited until the New York session because price is just relatively sideways. There's nothing really going on in the marketplace to really move price around. And then sometimes it takes until maybe US economic data, and then it'll actually react to that high and low of the previous day. Every single time it's different. The only thing you do is just wait for this strategy to develop. So in this case, it actually popped up and went right to that resistance point of the previous day. Once it does that, it's still within the 10 pip range. Remember, as long as it doesn't go beyond 10 pips above the high, but it needs to come up to at least 10 pips to the previous day's high. Now it qualifies here, and then I wait for a reversal signal candle. Now, a reversal signal candle is either an evening star or morning star, depending on which direction you're trading it in, or a bullish or bearish engulfing candle. And this was my engulfing bearish candle pattern. At this point, I have to identify with the CCI indicator that this particular reading on that signal candle is lower than the previous day's high CCI reading. So I look for the high here in the previous day, which is this white candle right here, and I can see the CCI, and the reading on the CCI from the previous day's high is 184.12. And on this closed candle here, I have a reading of 158. So it's lower here on the close of that candle than the previous day's high CCI reading. That's exactly what I want. It has to be lower. Now, my entry is on the close of that reversal candle, so you really have to be watching this particular trade unfold and the signal unfolding. You have to be ready for it. And then you just simply confirm it. You already know what the previous day's high CCI reading is, and then you just watch and wait until this candle closes, wait for that 30-minute candle to close, and that's my entry if everything lines up correctly and I have the CCI confirmation. Now, the close on this candle was 1.1121, or approximately 22. So at that point, I know what my entry is. It's 21, and I know I'm using a 20 pip target and a 20 pip stop. Let me put in the stops and the targets. If I'm using 21 as my entry, then I would need approximately, let's say 99, that, just let go of it right there. It's right about 99. And then the high is, or I'm sorry, the stop is 20 pips above my entry. Again, my entry was 21, so I'd be using a stop of approximately 41 right in here. So there's my stop, here's my target, my profit target, and I'm in the trade on the close of that candle. And in this instance, you'll notice that if it was to reverse and spike and test one more time, my stop is well above today's resistance point and yesterday's resistance point. It doesn't always happen, but it's something that I like to see, and it still works. So let's take a look at how long it actually took. So it comes back down, pulls back up around, and then here is where it hits its target. They don't always work this perfectly. They don't always move to the target this quick. Sometimes they take 3 hours. Sometimes they take 1 hour. Sometimes they take 7 hours. And again, sometimes I have to wait later in the day to actually get this HL30 trade. And the same thing works, and you can trade it off of the support level. This works perfectly. Again, it's a 20 pip target, 20 pip stop. It's really easy. And you can even trade it with multiple lots, and you can scale out if the trend continues to the downside. So I hope that helps you. One last thing, the CCI reading that I'm using for the 30-minute chart is set on the 14. I don't set it at anything else. I just use a 14 CCI reading on the 30-minute time frame. And again, I prefer to trade this on the 30-minute time frame. This is an awesome trading strategy. You can use it on any currency pair. I have to tell you, one last tip. It works extremely well on the dollar Canadian, this HL30 technique. I hope you got a lot of value out of this video. It's an awesome trading strategy, and I use this same trading strategy when I execute trades in my trade copier program.